Here. All right, welcome everybody to MLO Live Show. As people come in today, welcome. Happy Tuesday, everybody. Super excited to be here. I got a special guest and a new friend, which I'm excited about. She's got a lot of info. Courtney, I wish we'd just like open it up in the green room, just like start recording then, because we talk about, Brian brought up something that you have for financial planners, and so
Yeah.
it's exciting. Brian, I just want to say thank you for introducing me to Courtney Rozell for bringing us, and that's why she's on the call because of you. So thank you very
Yeah.
much, Brian.
Well, they got
Thank
a
you,
great
Brian.
system. They do.
All right. All right, Courtney, with Finance of America is in the house. I'm just going to spotlight you. So
All right.
I hope that's okay. There you go.
Yeah.
Looks like you got an interview today or something. No, I'm just kidding. You look nice. So she's like, oh, crap.
Yeah.
What do I
Am I?
got?
Geez, is this a new
You're
job?
being
Okay.
interviewed. No, I'm just kidding.
All
No.
right.
So, Courtney, tell us a little bit about yourself, where you're coming from, and let's get into the show.
Okay. So, welcome everybody. Hello. Thank you so much for having me on. I'm super excited to be here. My name's Courtney Rozell, and I am the manager of our partner engagement team at Finance of America. And for those of you that know or don't know, we are a reverse mortgage company. And when you hear, I know a lot of people think, oh gosh, when they hear the term reverse, but that's actually why I'm here today. I want to talk about it, answer questions, and take away some of those myths that are out there about reverse. But I've been with Finance of America for just about 5.5 years, and I really love what we do. I love the demographic of people that we help, and I love empowering loan originators to offer this to a whole different group of people that they didn't even necessarily know they could serve. And many of you probably, if you're on this call, you're obviously very much involved with loan originating and all of that, and you probably know that this industry landscape is changing a lot. It's no longer, in fact, Scott and I were just talking about this. It's really no longer transactional. It's very much relationship based.
Mhm.
And that being said, what people are looking for is a loan officer for life, right? They want somebody who they can contact and get their first home. They want somebody they can contact to get a refinance if that's possible, or a HELOC, and then they want somebody that's going to help them in their retirement years as well. So that's what our team's mission and focus is to really help educate loan originators on these products and how they really change people's lives.
Excellent. So, 100, but you have other stuff too. So let's talk about the reverse side first. So is
Yeah.
that your main focus? Is that number one, or is there several things that you help people with?
It's primarily reverse. So
Okay. Okay.
we Finance of America, about 3 or 4 years ago, we consolidated, and really we just focus on reverse. We used to do some forward mortgage through a different entity, but we've actually, consolidated that, and we're primarily reverse at this point.
Nice. So I want to talk about the myth, but I also the people that are there's a couple people I know that have mastered this with a reverse purchase market.
Yes.
Is that
Yes.
like the number one? Is that a number one topic that very few people know about that people can use to kind of get in the door?
Yeah, and I think it's interesting because um I think a lot of people think reverse is complicated. And I think, okay, that's, when you think about that, you could think of it that way, but I want to, challenge you all. I see like a few people on here, Mike and Kathleen and Lynn. Think about when you first started offering forward mortgages, right? Like it was a new language you had to learn and really be able to kind of talk about and slowly learn. You didn't learn everything overnight. And I think that's the case with reverse, but it's really the case with reverse for purchase, because
Mhm.
the feedback that we get is that, oh, reverse for purchase is complicated. It's not complicated. There's steps that you have to take to get there. But really what a reverse for purchase is that the person who, or the people who want to get into another home, maybe they want to downsize, maybe they want to move closer to their grandkids and their kids, they can sell their existing home, use some of the proceeds for a down payment on a new home, but that new home can be in a reverse mortgage, which means they don't have a mortgage payment. And that is very freeing and empowering for people, right? To be able to,
Yeah.
like, if I'm on a fixed income, I can move closer to my family and I don't have a house payment. Like,
Mm,
wow, that's amazing.
mm. I just know I got 6.5. I don't want to date myself here, but I got 6.5 years before I can qualify for this. I'm pretty excited. So I'm like,
Well,
don't let
I don't know about
even if my
that.
house is paid off, I'm gonna pull cash. I'm gonna pull as much cash as I can and just go. Like
Yeah,
let's have fun.
yeah, and that's that's what people should do is and some people that's so what I love about what you just said, Scott, is exactly the one of the myths that I like to dispel, which is that these products are not just for desperate people, right? They're not just for people who can't pay their house payment. They're
Mhm.
for people who want to live a more enriched retirement and be able to do some of the things that maybe they wouldn't be able to do if they didn't have extra cash or the ability to be flexible with their finances. So I think you
Right.
just hit the nail on the head there. I love that.
How do you, Courtney? How do you help? One of the things that I hear is a reverse mortgage. You're not just selling the people that want the reverse, but you're selling the family too. And the family's got this thing in their head like you're taking away my inheritance. That's what I hear almost every conversation.
Yep.
How do you help people overcome that? Or is it just not possible?
No, it's it's absolutely possible. And I think the first thing I would say is um, there are so many protections in place now that weren't there even, 10, 11 years ago. So when people say things like that, that was true. And I want to make sure everybody realizes that I will typically validate somebody's myth, right? Because a lot of the myths were real things that happened 20, 30, 40 years ago. I mean, the very first
Mhm.
reverse mortgage was in 1961. So
Wow.
literally a reverse mortgage is as old as it could get its own reverse mortgage at this point, right? So but a lot of the protections didn't really, I mean, didn't, the first protection came into place in 1988. And so when you start talking about, you know, kids, you used to be able to take out almost all of your equity in for to get a reverse, and now that's not possible. There's a specific calculation that is designed to preserve equity, but also give the borrower enough money that they can use wisely and use how they want.
Mm,
But 98% of the time, there is always equity left over for the children.
right.
And so that's and we actually have a class on that because you're right, that is a conversation that happens all the time and you have to get the buy-in of the adult children, right?
Yeah.
And by the way, when you do that, you probably have a client in, as you said, Scott, in 6.5 years, right? You probably have just gained another
Mhm.
client by helping them
100%.
parents. Here's
Yeah.
the other, and actually, Scott, sorry, here's the other thing I would say. A question I would ask the children is, are you prepared to take care of your parents financially
Mm,
while they're in this stage of life? I have a friend who completely depleted his entire savings until I had a conversation with him about a reverse mortgage. Like, so what's the cost to the child, right? To the adult
mhm.
children? That's a
Yeah.
question.
I had a great story. I got a great story. My only one of my only reverses that I did was for my aunt, and she had 30,000 in the bank and savings. She was pulling from it at a fast pace. It was going to last her 2.5 years, and then she was going to be out of money, and she couldn't afford to live. Did the reverse mortgage. She got to keep that 30,000. It didn't cost her any money to live anymore, to pull from her savings. So it was a beautiful thing.
Yeah.
So it was great. So what are some other myths that people are like marketing myths, or like when people are talking to people? Why is this 60 years later, like 88, 20, 40 years later, why is this got a still a bad stigma?
So I want to talk about that, but I actually love in the chat for the people that are on to throw in there, what have you heard, right? I mean, let's dispel some of the myths that your viewers and listeners have heard. I love that. Kathleen,
Fees is one,
absolutely
yeah.
fees. Yep, it's expensive, right? That's what I've heard. Like the closing costs are really high. Yeah, I've heard that. So I'll talk about that. Um, That actually depends on the product. So when we're talking about the FHA approved product, which is the home equity conversion mortgage, HECM, the fees are higher on that. But when you compare it to what the fees are taking care of, though you it the you're paying upfront for mortgage insurance. So
Mhm.
let's say you have $1 million home. I'm just going to throw that out there. I know not every home is a million, but it's easy to think about, right? So the equity that you could pull out is 500,000, but you have to pay those upfront mortgage insurance premiums. And so let's say that takes out 150,000. Now you are borrowing 350. So
Mhm.
it can cut into what the borrower is able to take out, but that also protects them and their spouse from ever having to leave the home. So that's another one that
Mhm.
comes out. I didn't see
Mhm.
anybody that put this in there, but that my spouse is going to be kicked out of the home when I pass away,
Mhm.
right?
Mhm.
Well, the HECM has non-borrowing spouse protections, meaning if the spouse is
Know that.
younger, it's they can be on the loan, and that mortgage insurance takes care of that, and they're able to stay in the home as long as they live. So
Wow.
it's a very safe product. So I love that you brought that up, Kathleen, because a lot of loan originators don't know that or don't bring it up, and it's a good thing to bring up because that is a thing. But it also, what does that what does that offer? And then
Yeah.
Lauren said the bank owns your home. That's absolutely not true. The home is stays in the borrower's name or names, and there's a non-recourse feature on all reverse products, whether it's FHA insured or if they are some of our proprietary products, right? And so what that means is when the person vacates the home, either they're going to sell the home or maybe they've passed away, then it's still owned by that person, but how you take care of the loan or how the children take care of the loan is up to them. They can
Mhm.
either buy it, refinance and keep the home, or they can sell the home and take the proceeds. And like I said, there's always equity left over. However, if there is a chance of depreciation, which we haven't seen a lot, obviously, probably in the last 10 to 15 years, but there are some areas that are starting to depreciate. The heirs will never owe more than what the home is worth, even if the loan value exceeds that. And that's really important because that really is a protection that is so important to be able to talk about, right?
Yeah.
Um,
Rick talks, I talk about the legacy that's left with other assets now that the mortgage payment isn't sucking those assets dry. That's,
Love
man,
it, Rick. And
that's
Rick
a
just said
great way. Yeah.
yeah, Rick just said I'm already closing loans with Finance of America. Woo! Yes, love
Let's
that.
go.
Love it, love it.
Sweet.
Um, Bill, yeah, so yes, the non-borrowing spouse does have to be on title. I will tell you, the younger the spouse, the less proceeds are available because they have to extend that for the amount of time that that person would be in, and there's a calculation that does that for you. But yes, they do have to be on title. Um, so Brian, and you've done, Brian and I have done a lot of work together. So the older spouse can qualify without the younger spouse. So the younger spouse's age is still a factor, which is you'll have
On the
that.
LTV, max LTV.
Yes.
Okay.
Yep. Yep.
Okay.
So
All right.
absolutely.
Uh,
So yeah, I love that you guys came up with some of those. If you have any other ones, let me know. But yeah, it's very and here's what I tell people too, Scott. Um, the most recent protection, which was financial assessment, where every product has to look and see if this is fine, if the person is financially able to maintain a reverse mortgage long term.
mhm.
And that came about in 2014. So when you think about that, that was only 12 years ago, right? So
Yeah.
we're talking 60 years of time, and only 12 years ago what we were, still putting protections in place. So there's a lot of myth and misconception out there that we're up against fighting back too, right?
Yeah.
So
Yeah.
yeah.
So you have a big event coming up in September. I want to talk about that because
Okay.
everybody's here. So let's talk about this event you're doing to help people in this arena.
Yeah.
Talk to us about that. And how do we attend? How do people sign up?
Yeah, I'll put I'll throw the information into chat here in just a minute. But yeah, so we are hosting and sponsoring a three-part series through NMP, which is Nationwide Mortgage Professionals. And the webinar is all about how to really start to look at the hidden opportunity that you probably have in your client base. Um,
Mm,
and then what that means, right? Like, what do you do with that? So, we're super excited about this because it's the first time that we're out doing training to loan officers that aren't already our
mm,
external approved partners.
mm,
So everybody's invited. It's an incredible opportunity to learn more about reverse, but learn more about reverse as it applies to you all who are, if you're mostly, have been focused on forward or traditional mortgage, how do you pull reverse into that? And a lot of here's what I hear about this and why I think people should attend this series. Um, Number one, people aren't, there's a lot of there's no more refis, right? Really. I mean, people can't refi. So that business has slowed significantly. And it's harder for people to get into a home right now with the rate. So loan officers are looking for another way to another tool in their toolbox, right? So that's a reason why you should attend. But also, a lot of loan originators are aging into this demographic, and when you are that age and you can have a
mm.
conversation that is based on where you're at in your life, it is so powerful, and that really builds trust with people. So that's
Love that. Yeah.
absolutely, yeah.
Yeah. I know a lot of people on this call and a lot of people that I work with are focusing on that um, just for that reason, because they are at that age and it's just easier to talk about it, they feel. But
Absolutely,
yeah.
absolutely. And if you have personal stories, right, Scott, you have a
Yeah.
personal story, so I feel
Absolutely.
like when you
Yeah.
have those, it's easier to talk about as well.
Yeah, and you can use other people's. You don't need. I mean, use my story. Like, hey, a friend of mine, this is what he did for his aunt. So, like, you can use other people's stories. So, if anybody has a story, I'd love to hear it. Bill Evans, if they have to use the younger spouse's age, why would you keep them off the loan if there is no credit qualifying on a HECM? Great question. I must be missing something.
You probably wouldn't keep them off the loan, and that's so. But I just was saying if it would only.
Younger than.
Right, and it would just decrease the loan amount that you might qualify for.
Okay.
So I'm not sure if
But he's saying if I keep him off the loan, I can qualify for more. Is what he's.
you can, and there might be a reason to do that, right? Maybe
Yeah.
there's a prenuptial agreement where maybe it's a second marriage and
Yeah.
the first spouse gets the proceeds from the house. I mean, there's reasons why you wouldn't do that, right? But if you want your spouse to stay in the home, you want you know
For safety reasons, yeah, for like have a
exactly,
place
then
to go
that's
and
when
not
you
have
would
to
do
pay.
that.
Okay, very cool.
Yeah.
Somebody asked if do I have to put them on title, or is it does non-borrowing spouse have to be on title?
Yeah,
Yes.
they if they
Okay.
if they want those
Depending on the
protections,
state.
they do.
Oh, if they want the protection, just on
Yep.
title on the mortgage as well, or title
Yep.
and
On the
both.
yep.
Okay.
Yep.
Okay. All right. Excellent. So where's the link? You were going to put the link up for the
Yep.
for the free.
I was
Okay.
just gonna see if I
Okay.
need to pull it up and then I'll throw it up there for everybody. So
What are
it's
the questions?
actually
Yeah.
it's actually on LinkedIn as well. If
Okay.
you go to LinkedIn and you connect with me,
Okay.
it'll be on there. And actually myself and
Oops, did we lose her?
my
There
colleague
we go.
Barb Cripple
Okay.
will be doing that.
Perfect. Awesome. All right. Hopefully it's not me slowing down. I think I'm okay. But what are the questions? Okay, so we were
No,
in the
it's
green room
me.
before we started. You said oh, was it you? Okay, no worries. So in the green room we talked about financial planners. You have something for
I'm
like
good.
what do you have going on
Sorry.
there?
So, this is such a perfect market for loan officers and loan originators to go after, right? So We actually have a class as an approved partner with Finance of America. You get free education, and one of the things that we have is we have a financial planner and reverse mortgage loan originator on our team, and he does a class every month. He actually does two classes. He does a class that's specific to um, sorry, I'm having a colleague grab the link for me because
Okay.
whenever I tried to open my internet, it went crazy. So,
Yeah.
um, so we have he offers two classes, one specifically for loan originators, and then one for loan originators to invite their financial planners to. And here's
Wow. Okay.
the thing about this. It's so powerful when you can have somebody that is a financial planner and believes in reverse mortgages and understands how they can help people preserve their portfolio, and who speaks the financial planner language, explain these to your financial
Mm,
planners, right?
mm, mm-hmm.
And Barbara Cripple, who is on my team as well, and she'll be doing this NMP class with me. She's been a broker, and she built her business, very successful business, on financial planner referrals alone.
Wow.
So
Okay.
it
Okay.
can be done, and
Okay.
it is
All right.
definitely.
I found the registration link. Here we
Oh,
go.
good. I did too, just now. I've thrown it
LinkedIn.
in there.
All right. Cool. There it is. Cool. Perfect. All right. So that starts September 17th. And I think you're coming back on like a week before there. So to talk more about this, because I think it's a huge
Yes.
opportunity. And the more I don't know if I should say this, but the older I get, the more conversations I have on it. So
Right,
so why not
exactly.
help my friends, you know? Let's
Yeah.
September 17th. So mark your calendars, go ahead and register. Is there a cost for this?
No, there's not.
Okay. So it's free. Okay.
It's free for all loan originators. And I would love to see you on, and feel free to forward this to people that you know.
Okay.
We're really wanting to just get the word out for people, right? We want people
Okay.
to know that this is an option, not only for you, and by the way, let's all talk about this for real. These are very lucrative loans for you. And I'm saying that because we all have to make money, right?
Right. Right.
I'm not saying that we're not, we're still charging origination fees and back end, margins and things like that. You have flexibility with that in most cases, but this is such a wonderful product to add, and you can make a good living on offering reverse. So,
Nice.
definitely,
And it's not a qualified mortgage. So is it do you have how does it work with you? Do I gotta like if I was to sign up with you, do a loan with you, do I gotta do the whole thing or can I just turn it over?
I love that you said that, Scott, because we have all different ways, right? And it depends on your relationship with our with Finance of America. So we have mortgage broker type situations where you send us the loan and we'll pretty much do all the processing and everything for you. And then we have what we call principal agents, which is where the company pretty much your company takes care of everything.
Okay.
Um, but either way, we have all that for you, and we have what we call an in-house processing team,
Mm,
which I don't know, actually, Rick, if you've ever used in-house processing with Finance of America, but they are one of the most incredible teams. They have their own underwriters, and they're very fast. And here's the best thing: if you're doing any of our proprietary products, which is Home Safe, Home Safe Select Intro, or a Home Safe Second, which by the way, Scott, we should talk about
mm. Let's do it.
that.
Okay, I love that.
Yeah.
I think that's
Um,
what Brian brought up. I think that's why we're
yeah.
here because a home safe second. Yes.
Yeah.
Love that.
So it's free. It's free.
Wait,
Yes.
what?
Yeah. So the in-house, when you do one of our proprietary products, the processing is free. So if it's a HECM loan, it's only $495, which to be quite honest with you
Mm,
is well worth the cost if you've never done a reverse before. Or even if you have a processor to go through that one or two times. It's very, very helpful for you to be able to do that. So absolutely.
So you can turn it over and have your processors. Do they communicate with your borrowers? Do they not? No, they don't. So we're doing the
It,
communication.
and we want that, right? We
Okay.
want you to own the relationship so that it's
Okay.
not us. You know what I mean? So, but here's the thing, the conditions and different things like that you're used to aren't necessarily the same for reverse. So it's nice to have somebody that already knows those things and be able to communicate that back to you and say, hey, can we get this from the borrower, and here's exactly what we need.
Nice.
Pretty
So
powerful.
where
Yeah.
do sorry to go backwards, but where do I find information, or where can I find information on the financial piece that you do for us with financial planners? Anywhere?
Yeah.
Yeah.
So I will let me get that link as well,
Okay. I know
and
you're going to
put
be
that
back
out
in tech,
there.
so yeah.
And I actually have a colleague on this call, so if they wouldn't
Okay.
mind getting that for me, I would very much appreciate it and throw it into.
Awesome.
Um, yeah, and the financial planner one is the one that's open to all. So I'll put that one in.
Okay.
The other one is open to partners who have who are our external partners. And if you want to become a partner, I'll put my email address in the chat, and then that way you can contact me and I can get that set up for you.
So I can see this being a big deal between divorce, like Lynn just brought up,
Yeah, Lynn.
reverse mortgage, so what is it? The safe second,
Home safe second.
home safe
Yes.
second.
Yep. Yep.
So, I mean, it like not like having these products in your quiver, so to speak, just to have a conversation. You just don't know who you're talking to that knows, because the people you're talking to in their 30s, 40s have parents that are approaching, you know.
Yeah.
So it's just one more way, one more opportunity. This is not market driven. This is age driven, right?
Yep.
So,
Yep.
I mean, that's the beautiful part about this program is we're not rate, we're not market, we're not inventory. This is people that own their homes, want to maybe buy a home, maybe downsize, I would call it, or I call it right size, whatever you want to do. And they got a home paid off and they're like, man, I still want to live in a home, but I want some money to have a little fun and or give to my kids. I've heard some people just, hey, I want to give my kids money while I'm alive so I can see what
Yeah.
they
That's a
do with it.
like we call that a living legacy,
Yeah,
right?
there you go. Love
And I
it.
think Lynn brings up a really good point. There are a lot of this age demographic. There are a lot of divorcing homeowners, and that reverse for purchase is key for that.
Hmm.
I mean, it's very, very
Yeah,
meaningful to be able to help somebody during that time of their life for sure. So, and you can
looks like
see there,
there's
Christina Danish put all the information for the financial planning
awesome.
in
Very
there.
cool. All right,
So,
and then Mike
Scott,
Dippy, go
yeah,
ahead.
Mike, what did
Yeah,
he say?
it says there a rule of thumb for the amount of equity a borrower will need to do a loan. Is there a calculator? Is there something
So there is a calculator, and it's
called
actually on
Chat
our
GPT or
website.
something?
Yeah, it's on our website. And so you can go on and you just need a few pieces of information. You need their date of birth, the state they live in, and then the amount of their first mortgage, and then it kind of calculates that for you. And
Hmm.
it's if you just go to www.financeofamerica.com, you can locate it there. But Mike, I would say about 50% is probably where they need to sit, give or take. It depends on the
50%
state, it
equity.
depends
Okay.
on the product, right? Because of
Mhm.
the upfront mortgage insurance. But that's kind of a good you know piece
Baseline.
to follow. So yeah,
Okay.
yeah.
All right. So if I'm 62, it's still 50, or I know the older the better it gets, but
Yeah, the better it
62, it's
gets. I mean,
yeah.
I would still say I would just keep that as a rule of thumb.
Okay.
And I will say, Scott, actually, the so Heckham is 62 and it's available in every state, but
62 years of age. Okay.
we have products that go all the way down to age 55.
Okay.
And depend I know I saw Kathleen's face. I love that. Yeah, it's
Like
actually
everybody leaned in. It's 55.
yeah,
Everybody's like, what?
yeah, and there are a lot of states that offer 55. So that's also on our
55 for what?
website. 55 for a reverse mortgage.
Come on.
I know. It's so I don't is this an hour long or is this 30
No, it's
minutes?
just 30 minutes. I know we're at the end,
Okay,
but
yeah.
yeah. So
So now you
just,
guys have to stay tuned, kid, okay? Because
I love
next
it.
time I'm on, or Scott, I can come back, whenever
Yeah.
you want me to. But I really want to talk about Home Safe Second with you all because This is such a great bridge product for you.
Okay.
If you've been selling forward, it's easy to have a conversation about a second because so many people are asking about HELOCs, right?
Crazy.
Yeah. So this is a fantastic product to that matches up against a HELOC. So
Love it.
yes, 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 yes.
So Courtney, unbelievable. She's coming back on September 10th. Don't miss it. We're just gonna kind of do a recap of this and talk about some more stuff. I'm gonna bring up the home safe second. I'm gonna bring up the 55. What's going on? Rick said a great resource is insurance reps who sell Medicare and Medicaid.
Yes. So
So
good, Rick.
something I've never even thought about. So no.
Yep. Nice. Thank you, Rick. I didn't,
Right.
by the way, I didn't pay him to come on, just so you guys all know that.
Sure.
Sure, you did it. You're
All
right.
right. Courtney, thank you so much. Appreciate
Thank
everything you
you.
know. It's awesome to meet you. And man, you're
Yes.
welcome back anytime. We love the reverse mortgage. I know it truly helps people once they get past the mindset of, I'm not getting, there's something weird about it.
Yeah.
So once they
Yeah.
get past that.
Yeah, please reach out to me if you have questions or if you're interested in becoming a partner, any of that. We are so open to questions and understanding, and we'll do one-on-ones with you, whatever you need. So please reach out. We would love that.
Excellent. Excellent. All right, guys. So Thursday, Denise Panza, don't miss it. The video that changed her life. You guys are going to see that. She's a big dog on LinkedIn. Next week, we have Heather, who's another video master. So she's going to be on here. And then Wayne Black is going to be here to talk more about reverse is becoming a big thing. So we're gonna lean in more into that because I got to find out about this 55 thing. So I'm gonna do some chat GPT in today. Right, Bill Evans? Woo, woo, woo. All right. And then after that, we have Sherry Riano, who's at 80 million. She'll probably be at 100 million by the time we get there. So I'm working on a bunch of other guests that are kicking butt, taking names. Look forward to bringing you guys what's working in today's market, help you guys to get back to the basics, have some fun, get some loans, close some loans, deepen our bank accounts, and whatever else comes with it. So again, Courtney, thank you so much for being here.
Thank
Appreciate you.
you.
You guys have an amazing day. We'll see you Thursday. Take care,
Thank
everybody.
you, everybody.
Bye bye.
Bye-bye.